Today we're tackling a big question that affects all of us. Who really benefits from inflation? We all feel the sting when prices go up for groceries, gas, and rent. It feels like our money just doesn't go as far as it used to. But have you ever wondered if someone somewhere is actually winning in this situation? It turns out the answer is yes. Let's dive into who these winners are and how it all works. First up, the biggest beneficiary of inflation is often governments, especially those with a lot of debt. Think about it. A government borrows a huge amount of money, let's say trillions of dollars. When inflation happens, the value of that money decreases over time. So when they eventually pay back that debt, they're using dollars that are worth less than the ones they originally borrowed. It's like taking out a loan to buy a car, and by the time you pay it back, the total amount you owe could barely buy you a bicycle. Inflation effectively shrinks the real value of their massive national debt, making it easier to manage. Plus, governments collect taxes based on nominal income and sales. As prices and wages rise with inflation, people get pushed into higher tax brackets and pay more in sales tax, even if their actual purchasing power hasn't increased. This means more tax revenue for the government without them even having to announce a tax hike. Next on the list are large corporations and owners of real assets. Big companies, especially those that can easily pass on higher cost to consumers, can do very well during inflationary periods. If their production costs go up by 5%, they might raise their prices by 7 or 8%, padding their profit margins. They have the market power to do this, while smaller businesses often struggle to keep up. Also, consider anyone who owns tangible assets like real estate, commodities like gold or oil or infrastructure. The value of these physical things tends to rise with inflation. If you own a house, its price likely goes up, increasing your net worth. The same goes for investors who own stocks in companies that produce essential goods. As the price of those goods rises, so does the company's value, and by extension, their stock price. So who are the main winners? Governments with large debts and owners of real assets and large corporations. On the flip side, who gets hurt the most? It's usually savers, retirees on fixed incomes, and low to middle income workers. If your savings are sitting in a bank account earning 1% interest while inflation is at 5%, you're losing purchasing power every single day. Your money is literally becoming less valuable. Similarly, if you're a retiree living off a fixed pension, your monthly check buys less and less as prices climb. And for workers whose wages don't keep pace with inflation, it feels like running on a treadmill. You're working just as hard, but you're falling further behind financially. Understanding who benefits from inflation helps us see the bigger economic picture. It's not just a random force of nature. It's a complex process that redistributes wealth, often from the bottom to the top. It silently erodes the savings of the cautious and rewards those who hold debt and tangible assets. It's a reminder of how important financial literacy is. Knowing how to invest in assets that hedge against inflation, rather than just saving cash, can make a huge difference in protecting your financial future. I hope this breakdown gives you a clearer perspective on the hidden dynamics of inflation. It's a topic that can feel overwhelming, but breaking it down helps us understand how the economy really works and how we can better navigate it. What are your thoughts on this? Have you found ways to protect your own finances from inflation? Let me know in the comments below. See you in the next one.